The 8:30 Eastern labor print dictates today's tape. The entire option structure is provisional until this data drops. Welcome to the Gamma Brief. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. As always, this is market intelligence, not financial advice. All right, let's get into it. It is Friday, June 5th, 6:45 a.m. Eastern, and ES futures are trading at 7,569. If today's jobs data forces a breach of 7,600, then the entire dealer hedging dynamic reverses. Pre-market dealer positioning sits in positive gamma, backed by $8.1 billion in net dealer exposure. In this environment, dealers are net long options, buying into dips and selling into strength to dampen volatility. However, the overnight regime is highly vulnerable. 3 high-impact releases scheduled before the open could force massive dealer re-hedging and rewrite the regime. We are operating near the gamma flip at 7,600, sitting just 15.7 points below it. With VIX at 15.68, the current positive gamma dampening is borderline and highly dependent on the incoming data. Looking at the critical pivots, the put wall sits at 7,550 and the call wall rests at 7,600. ES sits 20 above the put wall and 30 from the call wall. SPX close tracks similarly. 75-point expected move reaches down to 7,494, mathematically projecting a test or breach of the 7,550 put wall. The expected move also reaches up to 7,644, mathematically projecting a test or a breach of the 7,600 call wall. The primary driver overnight is the market. The primary driver overnight is the market making time ahead of the May non-farm payrolls and unemployment reports. Across the board, we see a mild risk-off posture with ES down 0.41%, VIX up 1.82%, and the 10-year yield dropping 2 basis points. Sector rotation shows a divided market. Technology led yesterday up 1.8% alongside industrials at 1.5%, while consumer defensive dropped 1.5% and consumer cyclical fell 0.5%. Non-farm payrolls print at 8:30 a.m. Eastern, with ES sitting just 30 points below the call wall. Tell me in the comments, does the print force a breakout above 7,600 or does dealer gamma absorb the shock? Today's threat matrix is entirely concentrated at 8:30 Eastern with non-farm payrolls, private payrolls, and unemployment rate all dropping simultaneously. A print that drives prices above the 7,600 flip shifts dealers into negative gamma, forcing them to chase the rally. A weak print that breaks below 7,550 put wall removes structural dealer support. Wait for the NFP data before entering positions. The environment is consistent with patient-based entries after morning data clears. Deploying income structures before the print is a lit fuse with no timer. A sustained hold above 7,600 invalidates the mean reverting setup and opens the door for a directional continuation towards 7,624. The market is pinned until the labor data clears. Let the 8:30 print reset the options board before deploying capital. The data drops before the open, let the market show its hand first. Level set, bias defined. Good luck out there. Standard disclaimer remains. This is market intelligence, not financial advice. Options are high risk. Manage your size and trade your own plan.